Welcome to another episode of the Gab Lab, a show that's designed to bring you financial intel and insight that won't only just blow your mind, but it's there to help you build your bottom line as well. I'm your show host, Tanya Woods Richardson, and today we are joined in the lab by special guest Crystal Buhler. Crystal is a CPA, Chartered Professional Accountant, and LIT, Licensed Insolvency Trustee, formerly known as a bankruptcy trustee. You'll love this. She is also the founder of Debt Free North, which is a boutique firm that works with clients on exploring their options when it comes to any sort of financial stress and debt that they might be under. So in today's call is actually aligning with day 2 of our Wake Up Call Challenge, which is all about doubling down on our personal debt. And so Crystal is in the lab with us today to explore what types of personal debt founders most often carry, and then, of course, to explore the options on getting that debt paid down. So thanks for joining. We'll see you in the lab. Make sure you've got pen and paper, take notes, sit back, enjoy. Hey founders, welcome to another episode of Gab Lab. And today we are joined by Crystal Buhler from C. Buhler and Associates. She is the founder and president of that organization, and here to talk to us today about debt. Crystal, welcome to the lab, the Gab Lab. So great to have you here.
Thank you for having me. I've always enjoyed our conversations, for sure.
And believe it or not, our conversations are always about debt. Not everybody
right?
Top conversation, but so glad that you're here today, because today actually this episode is airing at the same time that our founders are in the Wake Up Call Challenge, and they're on day 2, which is all about doubling down on their debt. So excited that you're here to be able to share with us some insights, especially because Crystal, you were able to join us in one of our previous sessions. And I think the biggest takeaway that most of the founders got from all of your intel and insight was that they're not alone in their debt. So excited
definitely
to explore how we can get them out of debt today.
You bet. Definitely not alone. It feels very intimidating to tackle this head on, but it's such an investment in your business and in yourself to do it and do it right. So very cool.
Okay. I'm curious. So in the work that you do, would you say a chunk of the people that you work with are primarily entrepreneurs and founders? What does that look like in your practice?
That's an interesting comment. I'm not sure that I know statistically perhaps what that representation is. It seems to come in fits and spurts. Obviously post-COVID here, we're I guess September now of 2022 when we're filming this. And we're going to see a lot of businesses that had been impacted, unfortunately, negatively through COVID. But in the past, I mean, I've been in this industry, it's got to be almost 18 years now. There seems to be ebbs and flows. Obviously, when Alberta had issues with oil and whatnot, there was lots of people coming out of that industry. There's just all sorts of challenges. And it seems like there's always some. So whether it's immediately when a business fails that someone reaches out for my services, or whether it's 2 to 5 years later, I used to run a business, now I've been an employee for 2 years and I still can't sort it out. So I'm really excited when I read the content of your day 2, and it's encouraging people to really wrap their heads around this and to kind of give it a 3-year time frame. And that's my encouragement too, is that if you can't deal with it in 3 years, then do something formal and move on. So yeah, I like that recommendation.
So a couple questions just on that. So the one of the phrases that really caught my attention there is waiting to the end, right? Waiting till they're in that panic zone of I need to get something done. I'm curious so you mentioned timeframes, but what do you feel are some of the biggest challenges that founders face, and how can we kind of preempt some of those challenges? So that's a double whammy question there. But maybe if we start with, what challenges do you see a lot of your clients and entrepreneurs specifically facing when it comes to debt?
That's a 2 for question. That's okay. I won't charge you for that. Just kidding. So we have, you had asked me, like you just said, what are some of the challenges? So I actually was able to put them really into 3 different categories. But before I talk about that, I want your founders to know, this is I hesitate to use the word normal when I refer to debt, but unfortunately, debt is a part of a lot of businesses right now. There was a study published, and I'm going to send you the link to include in your show notes. It's a fantastic study, just released in June of 2022. And I'm struggling to credit the source, but you'll have it in your notes. So it reports that 23% of business owners have up to $5,000 of personal debt. So not business debt, but personal debt that relates to the business. So that's 23%. It's not much. This is the one that caught my eye. 62% report having between $5,000 and $30,000 of business debt, business related personal debt. And so those numbers really kind of took my breath away. And this is what I do. It really shouldn't shock me. So when I look at three challenges.
Can I ask you just a question there on that?
Absolutely.
That's a huge number. 62%, $5,000 to $30,000. You said business and personal debt. What does that look like? Is it business debt, but with promissory notes attached to it, or?
Could be things. And this is one I see lots of is I cash advanced money off my credit card to inject in my business to make payroll. That's a scary one. I have, purchased all the inventory using my personal card so that I could get the points, but then I forgot to take the money out of the company, or it couldn't afford to pay me back for the advance on my card. So those are the kind of things. It also refers to folks who take home equity loans or lines of credit to inject funds in their business. So some of these things, again, I hesitate to use that word normal, but they're part of business planning. I think a big part of debt in business is whether you're using it proactively or reactively. And so proactively means, is it part of a plan and I have a cash flow plan to pay myself back? Or is it, oh shoot, I can't make payroll on Friday, I'm going to use my personal credit card, and that's reactive. And that's a warning sign. That's a scary place to be in. So
I don't know about you, Crystal. I think from the work that we do with a lot of founders, unfortunately, for the small business owners, most of it is that reactive. So
it is. So the three challenges that I kind of came up with is definitely running your business with debt, personal debt, business debt, whatever. Obviously increases bottom line, or it affects your bottom line, right? It decreases your profit. That one's pretty straightforward. Everybody understands I have debt, I pay interest, it reduces my profit. So that's a big concern when it's not planned for, especially right now. While those rates are changing, I think we're going to see a few more yet before the end of the year. You can't plan for changes that are beyond your control. So that's a problem. The other impact, and it's closely related, and it will sound the same until you drill down into your numbers, but debt impacts your cash flow. So the example of the $5,000 cash advance that you take personally and throw into your business, if you look at the math of that, when you actually do the interest and math, if you're going to pay yourself back that $5,000, but you're going to take 5 years to do it, long time, but if you're going to actually have to pull $9,600 out of your business. And that's after tax income. So when you figure the tax rate on personal and business earnings, your business has to bring in $12,000 of income to pay you back the $5,000 net to reimburse your credit card net of interest. So massive impact, almost a doubling impact on cash.
Yeah, I think just to pause there for a moment so that founders can really digest that.
Yeah.
Right. Because you're right. In working with founders and doing cash flow statements, they recognize they need money. So then they say, okay, well, I'll get a cash injection from a lender, and they put, okay, I need the 5,000 to your example. And then they forget the second part of that equation is to actually show the repayment, but not just the repayment of the 5, to show the repayment of the 5 with the interest. So yeah. I think, for those founders that are listening in that are doing the wake up call challenge, this is why the debt repayment calculator is so huge, because we joke that it kind of makes you want to vomit when you see that number on the interest that you pay, but it's the motivation that you need to get out of that rut, right? To go and make the numbers happen so you can get that repayment done. Thank you for that, Crystal. Okay. I think there was a third challenge, right?
So the third challenge, and this one, I the best way I can describe it, and I'm a country kid. I grew up in Manitoba, and I know you speak with a lot of those folks on the prairie, so you're going to get this one. We all went sledding as little kids, right? We all were on toboggans and whatnot. So this is the best way I can think of describing the third challenge. So if you're standing at the top of the hill, you look down the hill and you're like, this is going to be great. You get on the sled, bam, there's a tree at the bottom. Well, you didn't see it. That is the challenge of operating your business with debt, is that you may not see the tree that's going to stop your business. Sometimes the tree is Canada Revenue, probably most commonly. Sometimes it's a lawsuit, right? As a supplier sues you because you haven't been turning your account with them quickly enough. Sometimes it's you haven't maintained your property and then there was a slip and fall, and all of a sudden you have an employee or a customer who's very upset with you and decreasing goodwill, and you have to hire a lawyer. These are the sudden stops that most often land people in my office, quite frankly. So it was interesting. I'm a bit of I follow on Twitter. I don't do a whole lot on Twitter, but I do follow a gentleman from Southern Ontario who has a similar job to myself. He works for a trustee. He's not a trustee himself, but on August 25th, so about a week ago, I quote, this was his Twitter piece. It says, "I cannot remember getting so many calls about CRA freezing bank accounts." So if you think about it, August 25th, where are most of the CRA agents? They're still on holidays. And if he's gotten those calls, and I know we've gotten those calls, I can't imagine what it's going to be like by September 15th. So yeah, there's going to be a lot of people on those sleds meeting those trees here shortly. And so that's the challenge of operating with debt. So there's better ways to do it. Again, using debt proactively, which allows you to factor in the repayment, and you're not worried about that sudden stop. So
Wow. Okay. So I know we talk about CRA and IRS, and that's usually everybody stops breathing, right? And those stories, everybody starts to armor up. And I think the gift in those walls, unfortunately, is that, and it's just the way our brain is wired, is that we don't take action until we hit the wall, right? Until the pain is enough that it motivates us to say, okay, we have to get over this barrier now. So
absolutely.
just to recap, correct me if I'm wrong, but what I heard being the three biggest challenges that you see is just kind of messy. They've like pulled together personal and business, and they don't know what's what. They haven't organized it, and they haven't necessarily calculated the cost of that. The second is just that planning to get out of debt. So if they do need debt, how do you actually plan and budget and build the cash flow to get out of it, to make sure it's crystal clear? You're not seeing that. You're not seeing that proactive approach to it. And then you're also seeing that there's these trees that they're not even aware of, that then come and smack them upside, and they have to take action and get out of it. Okay. So with those challenges now, how can we like preempt some of that pain and angst? What can they do so that they're not calling you because they've hit a tree, but they're calling you to say, I don't want to hit the tree. What can I start to do?
So if they're in a position where they're considering using debt, either for the first time or in a expanded capacity, they're going from a small line of credit to a larger, longer term, they need to do the numbers. And this is one of the things that your program is phenomenal for, is saying, listen, we need to look 3 to 5 years out, not just 6 months, not just can I make the expenses this month. You've got to look 3 to 5 years and say, can I pay it back? Is it reasonable? What other resources am I going to need? So if the bank says, yeah, here's the money, what are your actual plans with it? And I know, even as a founder myself, we've made very conscious decisions to use or to not use debt because either we had a good purpose for it or we didn't have a good purpose for it, right? So you have to be careful. If they're in the position where they already have the debt, maybe it was reactionary and now they're here, what do I do? I think, again, I like to think in threes. So the first thing I would encourage them to do is work with the creditors themselves. You would be surprised at what banks and financial institutions, organizations like Community Futures and whatnot, that they may have gotten credit from. You would be surprised at what options they do have. I know COVID has opened up a whole bunch of things where, we didn't know banks could extend 3 months or this, but really they have a toolkit. You just need to ask to use it. So that's one thing. Now, their hands are sometimes bound. I'm not going to say that this is a fix-all for everything. Sometimes they'll just say, you know what, there's nothing we can do. But you've asked the question. You won't know until you do. So I think that's the first point. The other option I always consider is working with a reputable institution. And by that, I mean a reputable financial institution, any of your big banks, any of your credit unions, Case Populaires, somewhere like that, and actually wrap a business plan around the new debt. So if you go in, you get a consolidation loan, then make sure it fits within that repayment 3 to 5 years. If it's consolidation loan, if it's higher rate, you need to have a shorter time frame than 3 years. I would say 3 years is the max.
Can I just not to clarify, but I think I heard the word business plan in there, and I'm imagining a lot of founders are like, wait a minute, I'd have to do a whole business plan. Are you referring to a financial plan, like show them the numbers of how you're going to pay that back?
Yeah, I guess as a founder myself, I've always, and I should clarify, as a trustee, I'm also a CPA. You don't have to be, but I happen to be. And so I think numbers in dollars and cents. So our example of a moment ago where $5,000 cost you 12 grand, I love stuff like that. So,
Not that it's costing you 12 grand, but that you see it.
Right,
yeah,
exactly. But I know the numbers.
Yeah.
So, yeah, there's really two pieces to it. There's I'll call it soft and fluffy, the word version of this is what I'm going to do. And that's important because we all need metrics and measurables. But as an accountant and as the financial institution you're approaching, they want to see numbers. They want to see this is what the income will be. Here's the tax I will need to pay. And here's the business expenses I have to incur to get that revenue, right? And it's almost like working from the bottom to the top. I need enough left after taxes and interest and everything to make this a go. It cannot be a negative number.
Mm-hmm.
And then I need to figure out what's the top line that I need to generate to get that bottom line. So
I love that you shared that because I think we drink from the same well. It's the financial plan is the plan in numbers. It's the business plan in numbers. And then once you figure out the financial viability, including the debt repayment and or any capital that you might need, right? And then repaying that, then you take that and you translate that into words, which becomes Absolutely. The business plan. I find most founders do it the other way around. They try to figure out with words what their business is going to do, and then they try to jam in the numbers to make it fit with the words. But yeah, little rabbit hole there, but I love that you brought it up.
Maybe because we're numbers people that works for us. But I think, given my experience both in financing businesses and working with founders, you've got to get the numbers out there, even if you're not a numbers person. So many people say, I'm not a numbers person. I can sell the t-shirts, I can do whatever they're doing, I can make the cookies, but no, you know what? You need to know your numbers. Don't need to know anybody else's, it's yours.
Absolutely. So, business is about making money. I know that sounds, capitalistic, but you're not in business if you don't have the net profit. That's the end of the story. So
no,
I have hobbies, really does start with numbers.
Yeah, and I have a business. My hobbies, I will never make money. I have horses. We all know how that goes. But my business, yes, that needs to provide the lifestyle for the horses.
Yeah. And so I'm also curious, you used the term CPA, and I know for a lot of founders, especially because they can't I shouldn't say they can't. They are in the process of wrapping their head around numbers and acronyms and credentials. Yes. You've shared with us before, and maybe you can do it again with us here, the difference with a CPA and an LIT and a debt counselor and a debt consultant, because that was a huge eye-opener for founders in the past. So maybe if you wouldn't mind taking a few minutes to explore that with our audience.
You got it. I have a couple notes I'm going to reference here. But yeah, absolutely. So CPA, Chartered Professional Accountant. I've been in the industry long enough. I got my what was a CGA, and then across Canada in different capacities and in different times, all of these accounting designations merged. So if you used to be a CGA or a CA, people are familiar with that. We're now all CPAs, to my knowledge anyways, unless there's some outlier provinces. Ultimately, CPA, Chartered Professional Accountant, about 7 years of school. I try to block that part out. And most CPAs are your standard accountants. They work in, whether it's in industry or whether it's at a large firm, they do your financials at year end. They do tax planning, they do corporate planning. So if you want to move from a sole proprietor to a corporation, an accountant would be involved, a CPA. So I am that. Now, as part of being a licensed insolvency trustee, so there's your next acronym, LIT, we're debt specialists with a numbers background. Now, we don't have to be CPAs, but probably 70 to 80% of us are. It's just a good combination. A lot of people will get their CPA and say, hey, I really like debt and restructuring. And then they'll add on the LIT, which again is about another 7 or 8 years. And I'm not going to want to remember those, but it's quite a process. And LITs, which is us, we're actually the only federally regulated debt professional in Canada. So you often see ads on the radio. I know we can or hear ads on the radio, I guess. You can decrease your debt by 75%. You can this, you can that. If it's not an LIT that's advertising that, it's not actually a binding deal that you've reached with your creditors. It's essentially using contract law, which we all know there's ways in and around contracts, and contracts may be broken, instead of insolvency law. So insolvency law is not necessarily contract law. It's its own whole, my book is this big, and it intertwines with things like personal property law at each of the provinces. It intertwines with family law in certain cases, and it has its whole own, it's a life of its own outside of a contract. And so if you're looking to deal with debt, need to speak with a licensed insolvency trustee, and we're not super common, but every province and territory in Canada has access to them. Our office specifically handles the 3 prairies and the 3 northern territories, but there's someone in each of the major centers to meet with, and or meeting remotely, which is what we do with most of our clients. Just works for them, works for us. Professionals such as LITs, we are the only ones who can actually stop collection calls. So we have a direct line to CRA to say, hey, so-and-so's filed a bankruptcy, or so-and-so's filed a proposal with our office. We're the LIT. You need to stop phoning them, harassing them. They won't unfreeze a bank account, but they won't freeze a new one. So we'll often talk with founders about starting a new account somewhere else, filing a proposal or bankruptcy, and then the new account doesn't get frozen. And that's a privilege that's reserved basically only for LITs. There's no one else in the market that can do that.
So I so appreciate you sharing that. I know this is new for some of the founders that are listening in here, but again, that I think was one of the biggest takeaways for a lot of founders that you've worked with as one of our Nail the Number pros, that we don't know what we don't know. And then we find ourselves in trouble, and especially with that extra stress, right?
Oh.
And we reach out. There's lots of advertising. You're right. The billboards, the radio, the TV, and we reach out and we think we're doing the right thing. And so I know you've likely, just through that one piece alone on identifying the role of an LIT, and the power and the support that you can provide a founder in this specific circumstance, is huge. I know that's going to be insightful for a lot of founders. So thank you so much. Very powerful.
Well, thanks.
Very powerful.
What I'll do is in your show notes, I'm going to give you a lookup. So the federal government, so they license us, we pay annual fees to them. They can revoke licenses if a trustee acts offside. They can do all those things. They also keep a listing of LITs in every province and community across Canada. So I'm going to send you that for your show notes. People can click there, plug in their, small town Alberta, wherever they live, and they'll see a list of the trustees closest to them that they can simply phone. And the other thing with trustees is I have yet to meet one in 18 years that doesn't offer free consultations. So even when somebody has a business intertwined, the business, depending on the scope of the business, that may be a separate engagement, but we're always willing to talk with founders about their personal situation. My office does offer consultations to small businesses as well for free. So I won't speak for other trustees, but I know they'd happily chat with you on the phone. We want you to get good information. So yeah, and if any of your founders are struggling to find someone in their community, happily reach out to me and we'll connect them with somebody. We're a really small community. I have trustee friends like all over the country. It's really unique. I love it.
Well, I think that was one of the takeaways that I got from our last conversation too, was just how small that group of LITs really are. There's not thousands across Canada, right? There's a select number. I'm not even going to guess, but I think it was double digits. Right.
So in Manitoba, I'm going to guess about 15. We've had a couple retire or on the fence. There are in Manitoba alone. So we've got major center of Winnipeg. Outside of Winnipeg, there's 2 of us. We live in Brandon.
Wow. Wow.
But we are allowed to serve the whole area. So we serve in Manitoba, Thompson. We ourselves, we have clients, Northern Alberta, way up north by Hudson's Bay. Like we have the ability to reach that. So it's kind of neat.
Well, Crystal, thank you. Thank you so much for sharing all of your intel and your insights. Is there anything that I didn't ask that you wish that I would have, that you think is really important for founders to know here?
I know that founders often struggle with CRA, and sometimes because it's when you're not an accountant, it's this intimidating black hole. We're happy to work with them and help them understand what CRA is saying. The CRA is saying, I owe this, I don't understand. We're happy to work with that. But one of the things I'd like them to know is that unfortunately, when you're working with CRA, your options become fairly limited. If we're going back to the analogy of the trees, they're the really big tree at the bottom, and they kind of have all the power. So, and that's not a bad thing. It's just something that you have to know going in, right? It's an imbalance of power on the negotiation. So anything we do can include Canada Revenue debt. So any trustee can be consulted as far as how to deal with that. The one thing they are not likely to be happy about is if your taxes and stuff aren't up to date. It's hard to make a plan. It's hard to say this person needs to file bankruptcy if we don't know what they owe, or it's hard to make a deal, a proposal, if we don't know how much we need them to reduce their debt by. So not that we can help if the stuff is outstanding a long time, but it's something to not let get behind. Put it in the cash flow to work with an accountant or bookkeeper to keep that up.
Beautiful.
So.
Great point. Yeah. Schedule the budget, make sure you get it in, make sure you get it done, make sure you get up to date for sure. I think the other big takeaway that you mentioned it at the beginning, but I'll mention it again here, is communication, right? Don't go on silent mode, communicate, let your lenders know where you're at, let them know you're working on things. Reach out to Crystal and her team if you're in that area to be able to do so. If not, reach out to an LIT. And I think maybe in closing too, I will just share that some of our founders have reached out to you in the past, right? And I know that in speaking with them after you've provided your experience and insight for them, their biggest takeaway, I think, was realizing that there's actually options, that this big, scary monster of debt, and whether it's CRA or the credit cards or line of credit or promissory notes, that it's not that scary once you start to face it and you break it down and you actually have options. There's options that are available to you. So the sooner you start exploring your options, the more options you have. The longer you leave it, the less options you have, right?
I'd rather stand at the top of the hill and point to the trees with you that you don't see. Yeah, that's exactly what we love to do, for sure.
Beautiful. Crystal, thank you so much for your time.
Thank you.
And again, it's always not only is it insightful, but it's impactful. So thank you for your time. Founders, if you're watching this and you're doing the wake-up call, hopefully now that double down on debt day is making you feel a little bit more relieved. I will say, after you put together your 36-month plan, if you're feeling like, oh, this is going to be tough, or if you're still feeling angst and anxiety around it, reach out to Crystal, right? Start to understand what your options and your plans are there. If you're not in the Wake Up Call Challenge and you're interested in learning more, definitely drop us a line down below. We run the Wake Up Challenge 4 times a year, and we would love to support you in understanding your personal budget so that your business can be in the position of getting you paid, getting down that debt, and making sure that you're financially secure. Right, everybody, we'll see you in the next episode of the Gab Lab. Crystal, thank you again.
Thank you.
Bye, everyone.
Bye.